Hi everybody, this is Tor Storley, and I am back with another video. In this fourth video, we are going to be just talking a little bit about the output that we generated in the previous video and explain some of the terms, but I made a little extra twist on this, which I think is kind of interesting. So if you look, what I did was I opened up something called Google AI Studio. And if you look at it here, what you can do is you can go into the Gemini 2.0 Flash experimental version, and then you can start a new stream real time, and it's free. And once you start a new stream, it will ask you, for example, like this, share your screen. And when you choose share your screen, you point to the screen that you want to share, and that's what it will be recording. So what happens, I don't know if I can capture the audio when I do it, when I record through my stuff, but let me try it. So I'm going to share that. And this is my download folder. So I'm going to ask Gemini. Gemini, what am I looking at? A download folder? How many files are in there?
Sure, you're looking at a folder with a lot of files. It looks like there are 35 files in the download folder.
So as you can see, you can talk back and forth, and you can put up spreadsheets, you can put up all kinds of stuff. So what I wanted to do is I tried out some of the stuff we created so far in Positron, and then I had Gemini try to analyze it. So that's what I'm going to share with you in this video. So buckle up, I think that'll be fun.
Let's take a look at the NVDA distribution. The red dot in the middle of the box is the median value, and it represents the middle of the data points. The box itself represents the interquartile range, which is the spread between the 25th and 75th percentiles. The whiskers that extend out of the box are the minimum and maximum return values, except when outliers are present. The correlation metric shows how closely the returns of the asset are associated with the returns of the market. A value of 1 indicates a perfect positive correlation, meaning the asset moves in the same direction as the market. A 0 value means no correlation, and a -1 means perfect negative correlation. Beta minus and beta plus are measures of downside and upside risk respectively. Beta minus measures the volatility of the asset's returns when the market returns are negative, and beta plus when they are positive. The correlation metric, as you can see here, shows how closely the returns of the asset are associated with the returns of the market. A correlation value of 1 indicates a perfect positive relationship. Okay, the correlation-epi value is a measure of the statistical significance of the correlation. The information ratio measures the excess return of a portfolio relative to its benchmark per unit of risk. Okay, the R-squared metric shows the percentage of an asset's price movements that can be explained by movements in a benchmark. The tracking error measures the standard deviation of the difference between a portfolio's returns and those of its benchmark. Finally, the Traynor ratio is a measure of a portfolio's excess return per unit of market risk. This plot displays the annualized return, the annualized Sharpe ratio, and the annualized standard deviation for the ABT asset. The annualized return is a measure of the investment's return over a 1-year period. The annualized Sharpe ratio shows the excess return per unit of risk, and the annualized standard deviation quantifies the volatility of the asset over the year. This plot shows the monthly statistics for the ABT stock. The arithmetic mean represents the average monthly return. The geometric mean is the average compounded return. Kurtosis is a measure of the tailedness of a data set. LCL mean is the lower confidence limit. Maximum is the highest return in the period, and minimum is the lowest. The median is the middle value of the data. NAS is the number of missing data points. Observations is the total number of observations in your data. Quartile 1 and quartile 3 are the 25th and 75th percentiles of the data respectively. And finally, the standard error of the mean represents how far the sample mean is likely to be from the population mean. Based on the provided metrics, we can't definitively say if the monthly returns for ABT are normally distributed because we don't have enough data to determine that. However, we could look at the skewness metric. If the skewness is close to 0, the data is likely symmetrical, a key feature of a normal distribution. Kurtosis measures the tailedness of a dataset, which describes the shape of its probability distribution. If kurtosis is greater than 3, it indicates a distribution with heavier tails and more extreme outliers.
I have this performance chart for Abbott versus S&P 500. Can you please explain it and the meaning of it?
Sure, this chart shows the relative performance of Abbott stock compared to the S&P 500 from January 2014 to December 2024. It looks like it started at 1 and increased up to nearly 1.8, then decreased back down to around 1.1. Would you like a deeper explanation of any particular part of the chart?
No, but I got a different chart I want you to analyze and give me the details how to read it and interpret it in addition to what it means.
Okay, this chart shows 3 plots: cumulative return, monthly return, and drawdown for Abbott stock from January 2014 to December 2024. The cumulative return is the total return over time, which increased from around 1 to 4. The monthly return displays the performance month by month. The drawdown plot shows periods where there was a decline in the stock price from its previous peak. Is there a specific part of the chart that you'd like a more in-depth explanation on?
Yeah, I like to understand from an investor's point of view, how do you read this and what is the meaning of it?
From an investor's point of view, the cumulative return plot shows the overall growth of an investment over time. A rising line, like in this case, indicates a positive return for the investment over the period. The monthly returns provide insight into the stock's volatility. The drawdown chart shows periods of maximum loss from a peak, which can help investors assess the risk of the investment. Let me know if you need any further assistance.
Okay, I'd like to show you, you can also set this from audio to text in Gemini. And by doing so, I want to create some code. So let's see what happens. I have a spreadsheet with some data. And if you look here, you can see I filtered it down from all the other symbols to only use Apple. So I got Apple for each monthly data from 2014 and on. The RA is the rate of return for Apple. The RB is the return on S&P 500. So I'm going to try to see if we can get a chart out of this and see how accurate it is. So I'm going to share my screen here. Actually, I'm going to do this. Share. I want to import the data from this spreadsheet and using an R function and then generate in R a ggplot to visualize the rate of return for Apple, which is in the RA column. Those are the rate of returns for Apple. And in the RB column is the returns for the S&P 500. I also want you to give me the actual R code that will import the data in from that spreadsheet and generate a ggplot of Apple's rate of return against the GSPC's return. Can you help me? I don't see the code. Can you print out the code? Okay, I see what you did here. Yeah, I'll try this code and see if it works. I'm getting slightly different results every time I run this. So let me see what happens. I'm going to pause it for a second. All right, so I copied over the code that it gave me, and I'm going to see if this actually works. So let me try to run this, but I need to change the path here. So let me do that first. I'm sorry, I got to move it over. I just realized I'm recording the wrong screen. So this was the plot that I just got the code for, as you can see, the scatter plot here. But the one that I did before looks a little better, actually. This one here is actually this code you're looking at right here on the screen, this one. And that other plot, this one, is this code it gave me now. Now, the prompt was very similar for both of them, but it seems to be producing slightly different results depending on how you ask it. So yeah, take your pick, and you might have to go back and forth and be more specific. Say you want a line chart versus a scatter plot. But in any event, it was reacting to what I said, and it did understand it. And when you set it to text, it can actually print out the actual code, which is kind of nice. So that's it for now. I hope you liked this video, and if you do, give me a like and consider subscribing to my channel if you like my content. I really appreciate it. And again, I will see you very soon. Thank you so much.